Hello everyone, good morning. This is Sage live from Kalkine Studios and you are watching The Opening Bell. Let us cast an eye over how the Australian market charter is panning out today. Well, the Australian share market opened higher ahead of an important monetary policy meeting by the central bank that may see its cash rate stay at a record low, and the ASX 200 is inching up amid the tug of war between virus concerns as the country battles an outbreak of the highly contagious Delta variant of the coronavirus and strong oil and iron ore prices, on the other hand, helping the miners and energy stocks gain in the early trades. And meanwhile, the global stock market stayed close to their record highs on Monday as the market participants weighed increasing European business activity and robust growth in the recent US jobs report against the worries about the highly infectious Delta variant of the coronavirus. And although trading across the globe was thinner than usual, with US markets closed for the extended 4th of July weekend. And looking at the market open trades, energy and materials sector pulled the strings of the ASX 200. The top performing stocks in this index are EML Payments and IGO. Other top performing stocks in the ASX 200 included energy players Whitehaven Coal and Oil Search. And meanwhile, Abacus Property stood among the losers on the board. Abacus Property Group on purchasing 5 assets amounting to 160 million Australian dollars from Storage King. And besides the gold player, Ramelius Resources, IT company Appen, along with the healthcare players Clinuvel, Mesoblast and PolyNovo were the leading laggards during the early trades. Well, the economic data points will be the key to directing the market charter today. A weekly gauge of consumer confidence from ANZ and Roy Morgan fell 3.9% following lockdowns, and the measure fell to 107.8 points, lower than both the 4-week average of 110.9 and the monthly average of 112, and that stretches back to 1990. Besides that, the Reserve Bank of Australia's monetary policy meeting is on the horizon today. Markets are on tenterhooks ahead of the RBA's monetary policy decision, as the central bank has flagged a decision on the fate of its yield target and bond purchase program. And speculations are rife that the RBA will gently rein in some of its emergency monetary stimulus to reflect the nation's powerful economic recovery. While the central bank is unlikely to move its cash rate, experts expect it to adopt a flexible approach to bond purchases. The central bank is likely to decide against rolling over its 3-year yield target to the November 2024 bond from the existing April 2024 maturity. Such a move may emerge as an ultimate finish line for prevailing record low interest rates, while reflecting the RBA's continuing support for the economy to make sure the recovery is lasting. And meanwhile, yesterday's retail sales data grabbed attention after the retail turnover topped forecasts in May with a rise of 0.4%. And on the flip side, the recently released dwelling approvals data failed to impress as the number of dwellings approved declined by 7.1% in May. The fall was driven by a 10.3% decline in the private sector houses. And next, before we jump to the ASX charter for today in detail, let us look at Friday's US markets performance. The US stock markets were closed on Monday in observance of Independence Day, since the holiday falls during the weekend this year. The New York Stock Exchange and the Nasdaq will resume normal trading hours on Tuesday, 6th of July. However, the S&P 500 futures signalled a flat opening for Tuesday after the index closed 0.8% higher at a record high on Friday, and the Dow Jones rose 0.4% while the Nasdaq Composite was up 0.81%, setting another record over the weekend. On Friday, the US non-farm payroll data showed growth by a bigger than expected 850,000 jobs in June 2021. However, the unemployment rate also ticked up from 5.8% to 5.9%. Another key data, average hourly earnings, which is a measure of wage inflation, rose 0.3% in June 2021, lower than the forecast for a 0.4% increase. Moving on to the currency space. On Monday, the US dollar fell against a basket of major currencies after hitting resistance when last week's mixed bag of US jobs data calmed down investors' worries about a faster end to the monetary stimulus. And the dollar index was last down 0.1%, falling below Friday's low. However, with a 2% rise in the last 3 weeks since the US Fed announced its projected rate hikes in 2023, analysts think the US dollar still has more room to rise further. And meanwhile, the Australian and New Zealand dollars were struggling to keep the ongoing rally alive as investors are getting cautious ahead of the Reserve Bank of Australia's monetary policy meeting, which could see a change of course in its massive stimulus program. And now it's time for a short break, but please stay tuned as I'll be back with the trending updates for the Australian share market after this.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back. This is Sage, your host, live from Kalkine Studios in Sydney, and you're watching the show, The Opening Bell. Well, now that we have taken a glimpse at the US market performance, let us look at the major newsmakers in the Australian share market. To begin with, the multinational healthcare provider and hospital network Ramsay Healthcare dipped on raising cash offers for Spite Healthcare to 250 pence per share. The revised offer is at 30% premiums to the company's stock price as of 25th May 2021, when the deal was initially introduced. And meanwhile, Westpac dipped on selling the New Zealand life insurance business. One of the 4 largest banks of Australia, Westpac, announced on Tuesday that it has agreed with Fidelity Life Insurance to sell Westpac Life New Zealand and enter into an exclusive 15-year agreement for the distribution of life insurance products to Westpac's New Zealand customers. Then real estate investment trust Abacus Property Group dipped on purchasing 5 assets amounting to 160 million Australian dollars from Storage King. The 5 locations span more than 25,000 square metres in net lettable area and include storage centres in Chatswood, Artarmon, St Leonards, Dee Why and Pymble. As per the group, the deal will settle on August 3rd, funded from existing debt facilities. And next up, the news worth looking at is from Carnarvon Petroleum, jumped on forming a joint venture to produce renewable diesel. The oil and gas explorer announced that it has established a joint venture with Frontier Impact Group to produce renewable diesel and other sustainable products, and each party will own 50% equity in the joint venture, with Carnarvon set to invest $2.6 million in seed capital to enable the first project to reach financial close, which is expected by early 2022. And meanwhile, emerging BNPL player PayRight jumped on record June quarter. The June quarter's gross merchandise value of PayRight has grown by 134% to reach 26 million Australian dollars. Meanwhile, the company added a record 6,000 new customers in the 4th quarter of the financial year 2021, and this was much ahead of guidance. The total customers as of 30th June are up by 58% on the previous corresponding period. And now it's time for a short break, but please stay tuned as I'll be back with the trending updates for the Australian share market.
New Zealand is unique, and Kalkine TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at Kalkine TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit kalkine.co.nz.
Welcome back. This is Sage, your host, live from the Kalkine Studios, and you're watching the show, The Opening Bell. Let us now glance through the ASX sectoral charter. Well, the Australian technology shares traded lower during the early trades, and meanwhile, the ASX All Technology Index lost 1.06% on Monday and closed near the low of the day. IT players, Nuix, Afterpay, Zipco, Nearmap, Xero and WiseTech traded in the red zone. And meanwhile, Australian energy majors such as Beach Energy, AGL Energy and Oil Search traded in the green zone amid the oil price uptick. On Monday, the crude oil climbed higher as OPEC Plus nations called off talks on supply levels, meaning no deal to boost production has been agreed. And Brent crude oil futures were up 0.2%, while WTI crude oil futures gained 0.2% as well. Let us now move on to the shining miners space. The heavyweight miners BHP Group, Rio Tinto and Fortescue Metals traded in the green, defying the Chinese crackdown on metal trading. On Monday, the benchmark iron ore futures contract in China surged more than 5%, supported by the rising demand as mills resumed production after the country's party centenary. And the most actively traded iron ore futures for the September delivery month on the Dalian Commodity Exchange increased as much as 5.6%, the highest levels since 11th June 2021. And meanwhile, the copper prices inched up to their highest levels in more than 2 weeks, underpinned by the US dollar's halt in the uptrend and prompted fund buying. However, expectations of higher supplies and slowing demand in top consumer China capped the gains. On that note, the ASX-listed copper players, Oz Minerals, inched lower, while Sandfire Resources traded in the green territory during the early trading hours today. Then we'll move on to the yellow metal space, where Newcrest Mining and Evolution Mining, Ramelius and Gold Road traded in the red zone despite the gold price uptick. And the gold prices traded higher on Monday as a subdued US dollar and falling bond yields amid a mixed data of US jobs report diminished investors' concerns about a faster policy tightening, helping the yellow metal rise once again. And thanks for joining us on that report. That is all for now. Sage signing off, and we will be bringing you more stock updates in our upcoming live shows during the day. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors.